Did you know that if you were to buy a $1.3 million condo, over the course of 30 years, you could end up paying over $500,000 worth of interest? In this video, we will look at how much interest a home buyer would end up paying for a typical BTO, resale HDB, and resale condo over the 25 to 30 year loan. How much interest you end up paying is important, but is it everything? Yes, you should be aware of your interest payments, but that number should not overwhelm you. Before we dive in to look at how much interest a typical homeowner would end up paying, let's first look at some different perspectives on interest. Let's look at some arguments on why you should be very concerned, and also some arguments on why maybe you should not be so concerned about your interest payments. There are some reasons why the interest that you pay should concern you. Firstly, if you don't already know, your monthly installments are made up of two components: the principal and the interest. In layman terms, the principal is what you can call your own money, in the sense that when you eventually sell your property, this is money that you can get back, assuming you don't make a loss. The interest, on the other hand, is a different story. Once paid, you will never see it again. So for example, for this loan, this amount here is the principal, which you will get back once you sell your home. The amount here is the interest, which you will not see again. The proportion of the two values changes throughout the years. If you want to have a look at the total interest that you will pay throughout the entirety of the loan, you can click here and that will be the sum of the entire column here. Furthermore, you should also be concerned about your interest if you're using your property as an investment. The interest that you pay will have a very direct impact on your returns, as it would form a large proportion of your cost. But on the flip side, there are some who may tell you that you do not need to be overly concerned about the interest, and that the interest is not everything. If you're a home buyer, paying the interest is a necessary evil unless you're able to pay off the home in full. But let's say, even if you could pay off the home in full to save on the interest, it is debatable if you should do that. Let's dwell on this thought a little bit. Interest is simply the cost of borrowing. If you were to pay 3% for a home loan, but if you can use that borrowed money to generate more than 3% returns elsewhere, either in a fixed deposit or some other investments, would you agree that interest is not always a bad thing? Another point is not to be alarmed by the large numbers you will see when you tally up the total interest, like we will be doing later on. Firstly, over the years your savings will accumulate, and there is a good chance that you may be able to pay off your loan ahead of time. But we come back again to our point earlier. Even if you could pay off your loan earlier, should you do that? Secondly, there may also be a chance that you sell your unit before the 25 to 30 years is up. The price appreciation should be higher than the interest that you end up paying. Thirdly, let's be realistic. You need to take up a loan anyway to buy a home. You don't really have much of a choice, especially if the home is for your own stay. So in short, interest payments are important, but they are not the most important thing that you should look out for when buying a home. Back to the topic of buying a home, let's actually run the numbers and see how much a homeowner would end up paying for a typical BTO, a typical resale HDB, and a typical resale condo. Let's start with the BTO option. For the BTO, let's take this Tampines BTO in 2024 as an example. The price of a typical unit here is listed as $505K in the infographic shared by HDB. Let's make the assumption that you are only paying the minimum down payment of 20%. That means that you are taking a loan of 80% of the value. 80% of 505K equals to 404K, and that would be your loan quantum. In reality, however, you may end up paying more than 20% for your down payment if you were to take up a HDB loan. This is because that if you were to take a HDB loan, you will be forced to wipe out your CPF OA account for your down payment after receiving your grants. You can only choose to retain up to 20K and nothing more. So there is a good chance your down payment may be more than 20% and your loan quantum may be less than 80%, and that means that you may end up paying less interest than what we show here today. For a home loan of 404K, with an interest rate of 2.6%, which is the standard HDB rate as of 2024, and a loan tenure of 25 years, which is again the maximum allowed by HDB, you will have a monthly installment of $1,833. Now remember that this monthly installment is made up of both your principal and your interest. Now only focusing on the total interest, over 25 years, the total interest would be a total of $145,848. Something to note here is that your mortgage loan is a compound interest loan. For a HDB, over the course of 25 years, if you don't touch anything, your monthly installments would stay constant. But remember earlier that we mentioned that your monthly installment is made up of two components: the principal and the interest. What changes, however, is the respective amount of the monthly installment that goes towards paying down the principal and that goes towards interest payments. Unfortunately for borrowers, during the earlier years, more goes towards paying the interest than the principal. This concept of a compounding interest mortgage works the same, regardless of whether you're buying a BTO, a resale, or a condo, and whether you take a bank loan or a HDB loan. Moving on to the resale unit, let's use this 4-room unit here in Punggol as an example. It is asking for 668k. Following the same principles of the BTO example, let's assume we only pay the minimum down payment of 20%. That means we would take up a loan of 80%. 80% of 668k is 534k. Also similar to the BTO example, if you receive grants and if you take up a HDB loan, you will likely end up paying more than the minimum down payment, as you are only allowed to retain up to 20k in your CPF OA after your grants come in. So your own down payment will be very specific to your own case, and it makes sense to run the numbers by yourself. For the resale example, with a loan of 535k and an interest rate of 2.6% and a tenure of 25 years, your monthly installment would be $2,423, and the total interest paid over the course of 25 years would end up being $192,776. Do you think that this is a large number? Would you try to repay your loan early to avoid having to pay so much interest? I personally may not, as I can think of a few ways that I could generate more than 2.6% of returns elsewhere. But that's just me. What do you think? Let me know in the comment section below. Let's now switch things up and look at a private condo. I think a representative amount is about $1.3 million for a modest unit. For example, this 3-bedder here at Sengkang, which is not even near an MRT station. Similar to the HDB loan, the two main variables for a bank loan are the interest rate and the loan tenure. For the loan tenure of a bank loan, depending on your age, you can actually go up to maybe 30 or even 35 years. But let's use the 30-year option, as not many people qualify for the 35-year one. For a bank loan, the interest rate actually fluctuates, so there is no way that you can lock in or guarantee interest rate for the entire duration of the 30 years. This is the case for Singapore at least. In the US, for example, it is actually possible to get a very long term, such as a 30-year fixed rate loan. So back to Singapore, this is actually one benefit of taking a HDB loan over a bank loan, in the sense that in a HDB loan, you are able to get certainty over your interest rates. Since the interest rate of a bank loan is always changing, let's use a very average interest rate of about 3%. For context, in July 2024, the 2-year fixed rate mortgage is about 2.8% currently. Back to the example, since the minimum down payment for a bank loan is 25%, that would mean that the loan amount is 75%. 75% of 1.35 million is 1.012 million. Now assuming that the average interest rate for the loan is 3% throughout the 30 years, the monthly installment would be, looking only at the interest component, the total interest that you would pay over 30 years is $524,246. So there you have it, the amount of interest that a homeowner would end up paying for a typical BTO, resale HDB, and resale condo would be about 145k, 192k, and 524k respectively. The numbers for the HDB option are very much dependent on how much down payment you put in. If you were to take a HDB loan, this number is very much out of your control and more dependent on how much you happen to have in your CPF OA at the time of purchase. On the other hand, if you were to take a bank loan, it would be very dependent on specifics like which package you choose. The package that you choose will determine the interest rate that you would end up paying. The long story short is that this is just a very ballpark number, and that you should run your own numbers to determine how your own loan would be looking like. I would also suggest checking with HDB and your bank to confirm what these figures would look like. Now that we have seen these figures, we know how much interest that we would end up paying. To close things off, I like to focus on 3 things when it comes to interest. The first is not to dwell too much on this number over the course of the loan. On one hand, yes, you should be keeping tabs on this number. On the other hand, it is not something that you can really control anyway. Instead, I suggest to only focus on this number at the start when you're doing your financial planning, and not to dwell on it too much month to month. Month to month and over the course of the loan, I would suggest placing your focus more on the monthly installment, as that would impact your cash flow, and that is something that you need to manage. The second thing is that if you're still concerned about this large number, shift your focus over to something that you can control instead. This something should be the unit that you enter and the entry price. Don't get me wrong, the total interest is indeed a very large number, but in most cases, you need to buy a house anyway. I would suggest shifting your focus instead to choosing a unit that would have a higher chance of appreciating more than the interest that you would pay. You should remember that this large number is not something that is set in stone. Yes, I really dislike paying interest, But many things can change over the duration of 25 or 30 years. You may pay off your loan, you may move house, you may sell it off, the interest rates may go up or they may even go down. Instead, focus your efforts on prudent financial planning and conservative projected returns, and keeping in mind the fundamental reasons for buying the house in the first place. At the end of the day, interest is only one component of a much larger picture. There is also a secondary question of whether you should try to pay off your loan early to avoid the interest payments if you could. But I want to know from you guys, does the interest worry you? Would you pay down the loan early if you could? Let me know in the comment section below. See you guys in the next video.